All right, so let's quickly look at Felix Conflence trading, all right? And basic top-down analysis, not too just difficult and all of that. So first of all, what I do is to get my weekly key level. So I first change everything to line chart. So you can see very clean and be able to see uh important area. That's to mark my horizontal line. So I use this parallel channels. And so I'm going to mark it from the top. Okay. So you may be wondering, how do I mark this? If you want to know much about how do I do that, you can contact, or when you're in a group, you can know how that's done. So getting here, so probably, let's see, this support. It's a resistance and a little bit choppy. Then I'll take another one. Just go this way, perhaps here, somewhere here. All right. I need to change the color. Okay. I want to change the color to something not too shouting, so that everything can blend properly. Follow this. This is the only training you need to be a successful trader. Now, is it compulsory for you to mark what I mark? No, it's not. I'll always love to have weekly key level, and that's why I'm marking it. Now, I've marked it using this. Perhaps I could still pump to this because this is an area, though was a bit chubby that time. Now I'm done. There's the first step. But I don't trade too many instruments, and that's how I could do this. So could do that to Bitcoin, Ethereum, or Bitcoin Gold. And so I return back to charts, candlestick, Japanese candlestick. So let's go. We spread, this is weekly, so that I can have a place to breathe and manifest my trade. Now I go to daily time frame. Very simple. Okay. Now this is daily time frame. So first of all, I want to see it boldly opened on the daily time frame. So these are weekly key level that have been identified region. Of course, if you want to still adjust this one, you can go ahead and adjust it properly. And then, so there we go. Now, here is daily time frame. So what I need to do on my daily time frame is simple. So as I was saying, haven't done these basic fundamentals and then to know where I'm navigating from. So I'm going to go on daily. So there are 3 steps for my confluence trading. Number one, I need to identify the trend of the market. That's what we call directional bias or directional and structural bias. So that's the first thing to get in your trade. So first establish your directional bias. Okay, so directional bias is the first thing I'm going to get. Okay, directional bias is the first thing I want to get. Very, very important. Very important. So once I get the directional bias, then I want to mark key levels. So, all right, marking key levels and point of interest, POI. Okay, so now let's go. I've already seen that the market is uptrend, so it's not difficult. Why? It's an uptrend, but it's already trying to return back. So, but that's not the issue. So quickly, I'm going to go this way. What do I do? Let's go. Remember, I trade confluences. Okay, I trade confluences. So I navigate through the confluence. Now, this is pay attention. I'm not going detail about this, but this is just your expectation. So now, So since I trade confluences and this is an uptrend, so probably I want to mark, follow me as I mark structural break of this market, taken from this zone. So I'm within this zone now, this weekly zone. So let's go. Let's take the square. Here we have this. So what I'm going to do is to check the structural changes. So first, what do you do? Mark the structural change. This is a break of structure. So just look at the structural changes. Look at the structural changes. Now, sometimes this may not be too necessary as you need to focus on the major point where you are. So if I want to focus on the major point where I am, look at the immediate break of structure on daily time frame. So you see what I'm doing. The immediate break of structure on daily time frame is very important. Okay. Immediate break of structure on daily time frame. So you have this a break of structure, this a break of structure. Now, if you go up to the last point here, you can just find to say this is another break of structure. So, but let's quickly look at it. Another one here, but this is like a major one. Now, so what we have here, so when there's a break of structure, there should be an input that push that structure to be broken. So that point is called an order block. What do we call it? Order block, or you call it origin. So another block caused that break of structure. Now, look at this break of structure. The origin that metamorphosed the movement, this is this here. Here, look at it. Just spot the opposing candle, which is we call order block. We can call it anything, or you call it stumbling block. Okay, so look at it. This is daily. So if I like, I can label it so that you can just see what you are doing, neat job, and don't give yourself unnecessary stress. Here you go. If you look at this, a break of structure, if I just want to identify it, it gives you rest of mind, though. Remember that we say key level and point of interest. Now, there are things we check for point of interest. That is area where you should be trading from, area where you should be entering the market from, and all of that, so that you can structure your trade. So we have here, this is like, right, a shift. Now, so this shift, so the market that brought about this shift is this whole point here. So, we're on daily now, okay? So later you may remove it as they mitigated or as they not being relevant to what you are doing part time. So let's go. So we have identified all of these. These are structure. You know it's an uptrend. Now, probably you are looking for a buy or you are looking for a sell. Nevertheless, so the next thing, so what I'm doing now is called top-down analysis. Top-down analysis. Now I'm going to go straight down to 4 hours. Now, this is the best point for you as a scalper day traders to actually mark your structure properly. But the daily is good because if the market extraordinarily push either down or up, then there's a need for you to have all the structure. You understand? Now, if I come back, so that means looking at 4 hours now, this market is bearish. So that means it's a major, massive pullback. So 4 hours is a major, massive pullback of daily time frame. And that's why you see that the pullback landed at this point. So quickly, we're going to look at it. So here we go. This is an up, and then this is the internal shift, which is the change of character. So understand this. You can watch this video again and again. So we have that's a major break of structure, but internal structure. So which is a shift in market. Now this is a break of structure. Look at it here. So here, all of this on 4 hour time frame. So understand this. So we are dealing with this guy now because it has turned the other way around. So when this market break, so you're looking up here again, inside of this place, another significant area. This is point of interest. So I'll quickly change this probably to something different, okay? Probably change this one to something like this or something different that's going to come out, perhaps. Okay, so let's do, this is 4 hours OB. 4 hours on the block. Now here we got that, and then this place got broken, like that's the broken here. And then here the market again break the structure. So this is the point. we're going to look at the next point here. The next point here is here. This is the market that brought about this structural break. This structure that was broken here on 4-hour time frame. So this is another point of interest. Now, so the market actually broke this. This become a breaker block on daily time frame breaker block. So this is a breaker block. So it has been violated. Okay. So now, so let's push this one aside a bit so that we can see front. You see that? So we can see front. So practically, the market returned back to this point. This is daily order block, and it's a bullish order block. The market has pushed down so much to this point, and then we have another point here. You can see so that you don't jump it. See, this is a break of structure. And now, what causes that break of structure is this one again. Can you see this point? So all of this overall, even this as a daily, they are all, so I can label them. So let me just label them quickly. So this is 4H OB. All right, 4H OB. Okay, 4H OB, another 4H OB, 4H OB. That's order block. 4H OB. So I can just copy it. Another 4H OB. Now, all of these have not been mitigated. They are fresh bake. Now, this is daily OB, 1-day OB. Okay, 1-day OB. Now, that was the market actually was so busy that I missed today. Though I entered it and took some profit and yet enter short at 15-minute OB. Now, so let's go back. So you can see this is 1-day OB. So let's go this way. So you can see this is 1-day OB. Just for your clarification, I'm making to mark this. So I'm going to go to 1 hour. Some go to 2 hours, 3 hours, and all of that. I go straight away to 2 hour, 1 hour to synchronize what I'm doing. You get it now? So look at it. Oh my God, these markets are really messed up. So then this is a break of structure. So you can see there's a coinciding connection of the 1 hour time frame, right? A very neat job, okay? So I can as well continue to mark on this 1 hour time frame here. So, but let's just stop here. So let's take from here. This is a break of structure. Okay, now look at it. Look at 1 hour OB. I'm not going to mark it. So it's just aligned with this. So because it's going to be too much, okay? It's going to be too much. So you can just stop on 4 hours. This is 1 hour OB. Then we have another break of structure here. So we have another break of structure here. Okay. So this is another 1 hour OB, but we're not going to draw this because this was mitigated. Can you see? Neatly mitigated. So let's take it off. So it has finished its own job. So we have another what? This is a 1 hour OB. Then we have another 1 hour OB. See, this is an OB. Okay, if you scroll back down here, this is the same thing that caused that. So we have them all being mitigated. Fantastic, right? So here we come. It's a fresh break of structure that now run into the daily order block. Okay, so here you go. So imagine, so as at the time the market returned back to this OB, now I'm going to stretch further because at that time, probably maybe the market has not gotten to this point. Oh my word, this market is pushing up massively. There we go. We go to 30 minutes. Sometimes you want to just see probably so that you will not be. So 30 minutes, probably you can check. So, but I don't go too much on 30 minutes. Now, I want to show you what prompted this entry at this down point here. What prompted this entry? So the market moves straight. So we go to 15 minutes. So I don't do much go on 30 minutes perhaps. But if you look at this 30 minutes, something has happened here. Something has happened here on this 30 minutes. What happens on this 30 minutes is that I've seen another point of interest that when you run it to the another trigger, so this is a trigger, when you run it to a point of interest, it's called the power of three or candle ring theory. Now, this is one candle. And then, so the power of three candle ring theory, this is a range, this 30 minute, this is a range. So what I do to this most times, so don't be distracted, understand what I'm trying to achieve. So when you get this, I want the next candle to go open and close inside the range. And then I'll be looking for a buy. That's a topic for another day. So now let's quickly go. So this is top-down analysis. You'll find you've seen the market moving down. So let's go to 15 minutes, which is supposed to be the place you should stop to be taking your trade as a day trader. Now, here, the 15 minutes had traveled this way. I don't want to mark anything so that you don't get it twisted too much. Now, so if you look at it, this point, I think this other block, 4 hours of the block, had not been mitigated. Understand? It has not been mitigated. So you could find gold to travel to this point. Now, let's go quickly. Now, going back quickly to this point, you're going to go to a lower time frame. I mostly, first of all, go to 1 minute time frame. First of all go to 1 minute time frame. Once the market running to the other block. Okay? Now, the market has run into the other block. So some can just take a limit order. I don't do that anyway. So here we come. The market has run into the other block. See what has happened? Very simple. Now, and I need to again mark the structure, 1 minute structure. Now I want to mark. Look at what happened. We have a break of structure here. So let's just go this way. You have a break of structure here. Please, if there's a need for you to watch this video again and again, is important. This is a break of structure and another break of structure. Okay. So here is the lower low, the lowest. Okay. This is LL, right? Lower low. Okay. So here we have lower low. Now, the high that brought about this break of structure is this. So if this is the one that brought about this break of structure, so what you want is very simple. Now, but there's something you need to now understand. Sometimes the market, the same market, we create another low in between before getting to this high. But let's use this one as simple as possible. Now that we have a break of structure above this, you see this one, it's not called break of structure. It's called two things. It's either you call it BOS or you call it MSS. MSS. Okay? Sorry. It's either you call it not BOS, it's either you call it change of character or MSS. Now, so change of character or market structure shift. Okay, so understand that's what has happened here. Now, I'm trying to break this down very simple. So this is what has happened here. I always like the body of the candle to close so that you can manifest properly. Now, ordinarily, so the other block, so you need to have an other block on this smaller time frame. That's on this 1 minute. Now, if you check it now, the origin that caused the massive move, this is the other block, but the origin that caused the massive move, which is the last candle, is this. Can you see? Quickly look at it here. It make a lot of sense. Let me tell you why it make a lot of sense. Now, this same guy that caused this move had a fair value gap. Look at it, an imbalance. It's a perfect A plus move. It has an imbalance. Make it very, very significant. So here you come. The market has done all of this. You are getting your confirmatory entry. So you are now saying, oh, this market has respected this order block. So here you have return back to this origin. Look at this spin bar. Makes sense. So as far as return here, this is your entry. Now, conservative trader, whatever happened, my stop loss is still going to be below this point. That is how you secure it. So this is gold, 170 pips, 150 or 160 pips. It's not a bad one for gold. And you are targeting minimum, if it's an A plus setup, minimum of 1:3 risk reward. Now let's go. minimum of 1:3 risk reward. But first point, you are going to be targeting, of course, first point, you're going to be targeting 1:2 risk reward, so that which is your first take profit. But I DCA my entry. So I will now target here this other block. Now, this other block will give you how much risk reward? This is 1:4 risk reward. Now, so I now return back to 5 minutes. Now, listen, if you're doing this on 1 minute and it has not given you what you are looking for, you are permitted to check your 3 minutes, because sometimes what you are looking for, you may not find it on 1 minute, and then to be there available on, okay, to be available on 3 minutes, to be available on 5 minutes. Okay, so if you watch my Conflence entry A plus setup Conflence, you're going to find all of this. I have a script, a blueprint for this thing I'm teaching now that's going to help you. The material is there. You read it, you understand. This video too will help you as much as possible. Now, here you have the markets. So to target this other block that has not been mitigated. So that means you are targeting 1:4 risk reward. So using 170 pips to get 710 pips. You heard me right? So once you have done this, your 1:1 risk reward probably have given you what you're looking for. Then you DCA, because this is, you have waited for this, and then you DCA. So we'll turn back to 5 minutes so you can see the bolder market. Now, this is one thing that happened. When you have traded this market will be running and then pushing off as if it's going to. If you look at this market, apart from this mitigating this point, you can see a very massive up move back to this point. That means you are going to be targeting 1,200 pips, ladies and gentlemen, 1,200 pips if the market, all things being equal. But not all your market you're able to move up to this point, but you have just actually done the basic thing. So we return back to the 15 minutes. Good. Now the 15 minute, you begin to monitor your trade. TP1 taking, TP2, I always have 3 orders, or depending on what stop loss, sorry, it depends on what's my lot size, because I will not teach you about that, of course, going about what do I put into the market and all of that. Now, when the market begin to move up on 15-minute time frame, look at how you get new entry. Let me show you how you get new entry on 15 minutes, on 5 minutes, and all of that. So let's quickly go. The market has, look at the breakout structure here. So let's push this guy aside small. Now here on 15-minute time frame, now you have come live. So market has changed properly. This is 15-minute time frame. Do you see that? Now 15-minute time frame, this is a breakout structure. The origin that caused this 15-minute breakout structure is this man here. Makes sense. Now, so what you're waiting for is that you have marked this origin. Anytime the market traveled down to this point, you are looking for another entry. That's how you stack in more positions. Now, you see now, it tap into this point, probably at the close of the candle, or sometimes people put in limit order. So I may not have time to go down to that to 1 minute, but if you go to the 1 minute, you could find that now. So the entry again and the stop loss is below this candle, and then you can still target 1:2 risk reward. That will be done here. Can you see how you find more trade? Then the market, this is a breakout structure, a new breakout structure yet on this your 15-minute time frame. Here you find it. Can you see that? Now, finding this another origin, okay? Another origin. Look at the origin here. Make sense? Then this market return back there and tap into it easily. Can you see now? This tapping. Then that's another entry. Now here we have this. I'm sure you wouldn't know this. This is another breakout structure, because this is a breakout structure, another breakout structure. So that means this market is likely again to come back to this point. Now, the first entry you do this in breakout structure. Now, where is the origin? This is the origin, the whole place here. This is the guy that push this candle going up. So you could have this candle now come to touch this point. That would be another entry for you. Now, this is very simple. In sequential order, you'll be moving, I'll be moving. Now, the moment the market tap into this, do I just run away? No, you have taken all your profit. You are now watching again what this market should behave. What do it behave? You are now going to 1 minute time frame to see how the market run into this place and actually trying to pull back. Then you trade it back again. Now, even though this other block have been mitigated, what this other block will turn to will not be other block any longer. It will turn to a support zone. So you want to trade it back to that support zone, because at that point, here is mitigated, become a supply zone or resistance. Now turning to this point, support or supply or demand zone. So that's how you trade this market as simple as possible. I've just given you the summary of a Conflence. So first you have to identify the trend. Second, you have to mark your structure in order to do your top-down analysis. And once you're able to achieve your top-down analysis properly, then you are checking your Confluences. Now, a very strong order block come with a fair value gap. And another good side of it is that when the market is returning back to another block, so if you have a liquidity sweep and run into the fair value gap, is a very powerful A plus setup, Confluence trading, and all of that. So I'm sure this will help you. This is a very fantastic trading skills that you wouldn't want to joke with anytime. So we are more detailed kind of training that you will learn and all of that. Remember, we say all of these points are unmitigated order block. And so these are unmitigated 4 hours order block. These 4 hour order block, they are unmitigated. You understand? Then before we even run into all of those points. So marking your point of interest is very important. Now, I have other strategy I do combining both, the liquidity concept with Fibonacci retracement, being able to check the order block and then the fair value gap. Okay, the order block and fair value gap, then with the Fibonacci retracement. They are powerful concepts that when you learn, and then you will not rush into trade anyhow. You will want the trade to come to you. All right. So let's see this one now run into this and reject. Then you'll be selling down. You could come down here and turn this one to a breaker block again, no problem. Do you understand? So these are the ways we look at markets in a larger macro perspective so that we can enjoy more money. All right. So don't waste time. Don't look aside. You have to straight your face to learn as much as possible in maximizing this trade. All right. So my name again is Midas Felijimo. To enjoy all of this, you see a comment section there. There is a link that you will register, get onboarded. You get onboarded on how to get involved with us. We tell you all the basic things you need. You are not paying to join the community and have access to all of this, but there's a link that will onboard you into our group so that you can trade with us and maximize profit with A plus Confluence setup. Thank you very much. My name again is Midas Jima. I'm the team leader of Plan B Express. So you want to WhatsApp us, the Telegram channel and all of that, join our group, and how to get you onboarded is there on the comment section. You have a nice time.